Hey everybody, Kyle Sasser, Great Homes Tampa Bay, and today we are doing an interview with Bart Rice. Bart Rice is a local mortgage broker. He is one of my favorite mortgage brokers to work with. Good guy, always happy to explain things and help people out. He does a great job of working with people if you have some specific requirements or needs. If you are focused on lower down payments or lower monthly payments, like definitely the guy to talk to. So I recorded this before I went the video route here, so we're going to cut to a static image, but please do stay tuned because I think the content's really good, and I think you'll find a lot of value and a little bit of the behind the scenes on what happens between realtors and mortgage brokers. So for those of you who don't know, there's usually three primary people involved in a real estate transaction. On the professional side, obviously there's a buyer and seller. So on the professional side, there's a realtor, which is me. That's my job. So basically what we are, at least the good ones, or the great ones. Yeah. So what we do, we're basically a project manager. So we work with the buyer or the seller from start all the way to closing. We advised on property values, what the market's doing, how to negotiate, how to, spruce up a house to sell. All of that stuff is under our purview. In that, at various points in time, we also interface with other professionals in real estate, including home inspectors, obviously, and then title companies and mortgage companies. Mortgage brokers and banks and similar loan officers, that all of that umbrella. So title companies, real quick, basically what they do is they ensure that the people who are selling the house are legally able to sell that house. Long story short, we are going to have some title folks on here soon. I've been trying to convince my wife to come, but she's still holding out. But I'm gonna convince her, I promise. And then there's mortgage brokers and loan officers, and basically what they do is they work with folks, evaluate credit risk and like down payments and stuff like that, and they're the ones who actually put the financing together to make a real estate deal happen. So without further ado, here's my interview with Bart Rice of the Rice Financial Group. Hey everybody, Kyle Sasser here. This is Great Homes Tampa Bay, and I am here with Bart Rice of the Rice Financial Group, and he is a mortgage broker. So today we're going to talk about what exactly a mortgage broker does. So Bart, if you could introduce yourself a little bit, give us a little bit of your history and how you decided to become a mortgage broker.
Yeah, hey everybody, I'm Bart Rice, owner of the Rice Financial Group. We have been incorporated since 2006, I want to say 2007, around that time. I actually started working for another company back in 2004, November 2004. I was in a marketing sales business that was not doing as well as I had wanted it to do. And one of my business partners had branched off and got into mortgage, kind of in the refi boom when everybody was in it, and invited me over. He said that he was working with a company and they were doing really well, so I went over there. And it was, at first it was just, I realized in the sales business that I was really good with people. I was comfortable talking with people, walking people through whatever it was that we were marketing at the time. And mortgages was really no different. It was obviously a much bigger deal, a much bigger purchase, but it was still kind of that very casual relational experience that I found that I was, I felt like people were comfortable with me. I was comfortable with them. So I was, it was almost instant success being able to apply it towards, now it was easy to be a mortgage broker back in 2004 because the rates had just improved and there was a huge refi boom. Mm-hmm. So I think it was, everybody with a face was kind of getting into real estate at that time.
Yeah. So you were in before the crash, 2006.
Yes, definitely. Yeah. So I got in and instantly started doing well. I worked for a company at the time called Premier. Well, there were two companies. The Premier Mortgage Funding, which was like a net branch. So these people that were getting into the mortgage business not only wanted to do it themselves, but they wanted to have a bunch of people, under their little blanket doing the same thing. making money for them. And the guy I worked with, basically, would provide us with leads that he would generate, and we would call on these people. It was almost like we would go to the phone book and just start in the A's and just start calling people. Hey, have you refied yet? Have you refied yet? It was that stupid.
Yeah.
Because a lot of people had higher rates and they were down. I think they were I don't know what they were, 5s at the time. And it was like 20% of the people you talked to hadn't. And you would start it up. And that was back also when the product was subprime and it was just easy to get everybody done.
Yeah.
So that's when I started. That was before the crash. So a lot happened before the crash. The stated income, stated asset, and all this really led up to the crash. Mm-hmm. It was inevitable because they were loaning money to people not only with zero equity, doing 100% financing, but they weren't checking all the documents that they needed to check to make sure that these people could actually do it. And if most people were just buying one home, that might have been okay. But most people were. It was also a big real estate investment, time where everybody was buying. We would have closed people on, 4, 5, 6 homes, that they were buying these homes to flip. Mm. So this is the lead of the big bubble.
Yeah, and we're definitely not back at that point currently.
No, there's nothing close to that.
And I do, it was seriously, I know at least one mortgage broker that did jail time for, falsifying loan applications back during all that stuff. So,
well, you know what? I knew some people that also did jail time, and to me, the way I always saw there was so much good business out there. I never understood the people that were getting involved in the bad business. It was, you could make a good living doing the right thing.
Yeah.
So why would
legitimately was so easy.
Exactly. Why would you be? There was no need to go and falsify documentation. I just never understood that.
Yeah.
And thank goodness we never got involved with it. And I don't know, not personal friends, but I know of people that did get in trouble for that.
Same with me. So Bart, you are my mortgage broker. I refer a lot of business to you. Whenever I send you a referral, I usually send you a name and a phone number.
Right.
So just kind of what do you look at? Where do you start?
Sure. Well, like I said, it's very relational. So people are, you kind of have, everybody is different. We say that every loan is its own thumbprint. So everybody has a different situation, a different income, different assets, a different starting point, different goals. So we really just want to get to know these people. And I was just explaining that I like realtors like you that kind of hand it over to us and don't try to micromanage our job, because we do a good job with that, and we're going to take care of your client. We're going to be a good extension of our realtors.
Yeah.
And I always tell my most successful realtors are the ones that just bring us the borrower and trust that we're going to be a good partner for them. And not, we do so much business that we don't, we're not greedy. We don't have to make a deal work. So I like to tell people, I'm a loan coach. I'm a coach. And first and foremost, and I'll tell you, and you probably don't want to hear this as a realtor, but if I don't feel like somebody should be buying a home because it's going to be detrimental to their finances, I'll tell them.
Yeah.
Because I just believe that's the right morals. It's just, so we're kind of coaching people. I'm not saying you as a realtor, you wouldn't agree with that.
It's true. Honestly, just yesterday, because I always make sure to tell people what's in their best interest.
Right.
Even if financially it's not the best for me.
Exactly.
So even just yesterday, I told a lady she wanted to put an offer in on one of my listings. And I laid it out for her. I was like, okay, well, I can do both sides. And that's this percentage, that's the commission. Usually I reduce 1% if I handle both sides. I was like, or you're welcome to get your own realtor who, will work with you and represent your interests as well. Or you can trust me to do both sides for a little bit of discount. Whichever one of those you're comfortable with, that's perfectly fine. To me, it doesn't matter.
I think that when you have that kind of indifference, people can see that and they feel more comfortable with you. So and I found that, if I had to be desperate at this business, if I had to do something like you were talking about falsifying documents, if I had to do something that was going to put somebody in a bad situation, I would rather go and just cut lawns or do something, for a living.
Yeah. Because here's the other thing. You don't get paid until the loan closes.
Exactly.
Just like me, I don't get paid until the transaction closes.
Right. So we're all in this together. Yeah. It really isn't. But I have found, and it's always been successful this way, is if you take care of people, the money just ends up in the bank. You don't have to think about the money. You don't get desperate. Don't worry about that. Just take care of people. Become a coach. That's how we like to look at ourselves, as a coach, to walk people through. So to answer your question, what we do with people, We start off with an application. Actually, we start off with a conversation. I don't even take an application if I don't feel like it's going to go anywhere. So we start to talk about their situation, what their objectives are. We talk about their income source, their down payment source, how their credit is, their current liabilities. And if I feel like it's going to be good, that's kind of a green light to move on to an application.
Yeah.
So we start off with kind of a soft, phone conversation, if you will.
Mm-hmm. And your applications compared to other mortgage brokers is a little more in depth.
Yeah. Well, I think that, like I said, it's you kind of start off with one part, and if you feel like you hit that green light, then you go to an application and you get, all of their asset information, you get their income information, and if everything looks good there, then we go with a credit pull.
Yeah.
We do a hard credit pull with all 3 bureaus, and that pretty much tells the whole story. If there's somebody that's iffy, we'll have our loan processor, either Vivian or Casey, will actually run it through AUS, which is automated underwriting through Fannie and Freddie, and you can actually get an approval there. And if you even need more, you can submit your loans now on a to be determined property and get a full underwrite with lenders.
Oh, nice.
Which we do that if we need to, or if somebody really wants us to do that, which it also saves time. So if somebody has a full underwrite, you can get all their conditions cleared and then literally find a property, do an appraisal, get the title work, and close in less than 2 weeks.
Yeah. So at what point in, like, I know what I tell people, at which point they should talk to a realtor. At what point in the process do you feel that people should speak with a mortgage broker?
Right away. I think that people need to make sure that they have their finances in order before they start looking for a home. Not only to make sure that they can qualify, but to see how much they can qualify for, because let's face it, it's a very emotional thing. Even for me too, when, real estate is very exciting, buying a home is exciting. So sometimes if you think, if you don't know what you qualify for, let's say you're looking for a $300,000 home, but you're really in the 225 range, but you fall in love with this house. Not only are you wasting everybody's time, but you're getting emotionally attached to it. Then you start to try to make things work that you shouldn't do, and then you start to take risk. And even if you qualify for this home, maybe it's just not in your affordability. You're going to be house poor, as people call it.
Yeah, coming from a position of desperation is never a good thing.
Right. And we see people start to tell them, they'll come and say, okay, I don't want to be more than $2,000 a month all in. And then I'll hear them start to sell themselves. It's like, well, we found a house. My wife just loves it. It's going to be $2,800. We're going to make it work. We're going to cut out this or cut out that. And like I said, we like to coach them. I'll remind them, hey, listen, you might be able to afford this. You might qualify for it. But let's not forget, after all the dust settles 6 months down the road, the newness is going to be gone, but the mortgage bill is still coming.
Yeah, 30 years is a long time.
Exactly. And I'm telling you, so I tell people this is a very big purchase, so be careful with something like that.
Yeah.
It's not like buying a car on an impulse or something that you can go and try to sell or whatever. This is a much bigger deal.
Yes. And a lot harder to sell a house than a car.
Exactly. You don't want to get caught in that situation. So it's fun to try to guide people through, and that's part of the pleasure of what we do, is they entrust us with so much information.
So speaking of, what's the most common issues you find when people are qualifying for mortgages?
Again, it's everybody has kind of their own little thumbprint, but I would say debt to income ratio would probably be first and foremost. Is people that just don't make enough money to qualify if their credit is in good order. Mm-hmm. But usually people that have good credit, they have a decent income. I would say down payment would probably be second. But, nowadays they have, gifting is allowed, down payment assistance.
Okay, so they've rolled back the gifting requirements a little bit?
You can get gifting, so it's different.
All right, let's start off. What's
a
gifting? Yes.
As long as your credit is in good shape, you can get a gift from a relative, family member, or somebody like that, a parent, for the down payment.
Yeah, because used to the requirements on that was a little bit more strict from what I remember. Is that
what it used to be? And this is where I was trying to think about. I was crossing the lines with seller concessions, but you have to have a certain credit score. So you have to kind of be set up in order to be able to receive a gift.
Yeah, because I know I've had a couple buyers where they had gone through the process of FHA, and they had, the money had been given to them by a family member, and then they were like, hey, where'd that money come from? And
you're talking about sourcing gifts. Yeah. Sourcing gifts is definitely, okay, so that's something that seems to aggravate people more than anything else with underwriting, is showing where things come from, and rightly so. Like if you have cash, if you've got a bunch of jars buried in the back, and you say, hey, I'm going to go out and dig up $10,000, I got it buried, I don't trust the banking system, and you want to bring that to closing, that's your money, and rightfully so. But the underwriter won't allow you to use that money because they want to make sure, in order to qualify, that you have the wherewithal to be able to save this money up. So you have to show it. Now, you don't have to go too deep in sourcing, meaning you don't have to go back more than 60 days.
Yeah.
So if you can provide us with 60 days bank statements and the money's already there, then an underwriter will accept that money. If a large deposit comes into your bank account, they want to know where that came from.
Yeah.
So if it's a gift from a family member, they're gonna have that family member will have to provide a copy of the gift check. They'll have to sign a gift letter saying that it's not required to be repaid.
Yeah.
And you'll have to show that money coming into your account.
Yeah.
Sometimes they have the donor has to show a copy of their bank statement showing the money coming out of their account, depending on the type of loan.
Well, because real estate is there's a lot of money laundering and similar sorts of things going through buying homes.
Yeah.
So I know there's recently, I don't know if it's probably not, is it tied to that or?
It's kind of funny that you asked that. Is sometimes I'll agree with our borrower that a lot of this stuff seems ridiculous, some of the rules and guidelines, because I don't think like a criminal. So you know what I mean? It's like, if you don't, like we talked about falsifying documents, it's like, I don't know, I know that a lot of these rules do seem a little cumbersome, but really that's what they're trying to do, is make sure that everybody's on the up and up.
Yeah.
And
so my wife, she works in title. So I kind of, they're responsible for handling a lot of that stuff. So like the FIRPTA requirements, which is like foreign investment in real estate or something like that.
Yeah, that's not in our...
Yeah, but it's not related to mortgage brokering. But there's requirements where if you sell a house and you're not a resident or a citizen of the United States, the title company is required to withhold a certain percentage of the proceeds of that sale to satisfy the tax requirements for that sale.
That's interesting.
And there's been a bunch, like Miami's been kind of a hotbed for money laundering through real estate. New York's the same way.
And so they have every right to have these rules, and you don't realize it until something happens. Just like the big wire fraud thing that's going on right now.
Yeah. So if you'd like to go into that a little bit, because I haven't covered that.
That just happened to one of our clients, and he was able to recover all his money, but it was a very substantial amount. It was over $150,000. He was just getting ready to close. Now, we always, up to this point, we would always send an email to the buyer with wire instructions to remind them what it is and to show them what the amount is. Now we don't get involved with that because of the liability.
Yes.
So Vivian and I just had this conversation because this person, it wasn't from us, but they had copied all of the realtor's information, their email, and sent an email to this buyer saying, please wire these funds. And it was actually close to what they were supposed to wire, within a couple $1,000s.
Yeah. And
this borrower being so trusting, it was just a great buyer and everything. And they went and wired the money. But it was to a different title, not a different title company, but a different bank account that didn't belong to the title company. And unfortunately, it was Wells Fargo to Bank of America, or Bank of America to Wells Fargo, something like that. We were able to stop the wire. We found out about it.
That's very lucky, because usually
$150,000.
Yeah, usually once the wire is gone, like that's it.
But to the fact that I just couldn't. I was baffled, and I guess I felt I felt a little naive at the time, because again that had not happened with one of our situations up until
I've had 2
months ago.
I've had 2 attempts, and not on my. So obviously I'm doing a podcast. I'm relatively technically savvy, but yeah, they are very good at it nowadays. So title companies are required to have secure communications with any communication they have with the buyer. Pertaining to the transaction. I believe mortgages are similar.
Yeah, everything that comes out, everything is secure and everything is coded, but
agents, we're not
required to. So mainly it's just contracts, right, that you guys are sending.
Yes. The problem is if an agent's computer or email account is compromised, obviously through the email chain from me sending mortgage or title,
that's what they're going to. That's what they're using.
They see that there's a transaction in progress. All they have to do is they can either send it directly from a compromised account or create one that's very similar that has like an L instead of a 1 or something like that in the email address. People don't check it.
Right. Because you see the signature and everything looks the same, and you've been used to seeing that for the last 30 days.
As soon as we hit the contract stage of a transaction, I tell my buyers, I'm like, I will never give you wiring instructions ever. Only get your wiring instructions from the title company and call them and confirm it over the phone.
Yeah.
I mean, technically, there's still. I've been in computers and computer security for a very long time.
But let me tell you, the one that happened to us, they actually called the title company over the phone, and somebody got on the phone and confirmed the wire instructions. So they must have. Yeah. We can't. That part we're baffled about. I don't know if they intercepted the call.
There's still a gap in there.
Yeah, how could that happen? We don't even know how that could have happened. All we know is we recovered the money, and now we don't send any wire instructions at all. We just tell our borrowers, you make sure that you get it directly from the title company, not from a broker, not from a realtor.
Yeah. Exactly.
Nothing.
I apologize. I'm like, listen, I'm a full service realtor. I'm like, this is the one thing I can't do for you.
Right.
Because the risk.
Well, that's just it. Yeah, we want to be full service. We want to give them all the information. So, and Vivian is great. Vivian's our loan processor. She's our lead loan processor.
Yep.
She goes above and beyond her job to do all these things and add all that added service. But we decided.
Shout out to Vivian. She's a longtime friend.
Vivian Newton. Yeah. So Vivian Newton's our lead loan processor, and Casey Congle is also a loan processor with our company. Mm-hmm. So they handle all the back end work.
All right. So you get the application, you put it all through the underwriting and everything. They're good to go.
Right.
And then they work with me. I take them out. I show them around. They find a house they're in love with. We come to an agreement with the buyer. We put a contract in. After that point, I let you know that there's a contract, but I don't really know what happens after that.
So when you said, back up a second, so you said something about underwriting. Typically, we don't send loans through underwriting on the to be determined.
Okay.
That's just an option. But the reason we don't do that is if it never comes to fruition, that's a lot of time that's wasted. And we have files that are registered with clients, and it gets to be messy. We only do that if somebody is A, in a hurry, or B, their situation is so unique that we want to just make sure that the underwriter has a chance. Let's say they're self-employed and they have all kinds of interesting write-offs or whatever the case may be.
Which would be my case.
Yeah, so we want to get an extra look. It's not just running it through automated underwriting, but we now want to have it manually underwritten as well.
Yeah.
But very rare will we have that situation. So typically what happens after you provide us with a contract, that's when it actually goes into manual underwriting.
Okay.
So credit's already been pulled. It's already been run through automated underwriting. So we can do a loan application, a credit pull, automated underwriting in less than a half hour, literally in 15 minutes. But by the time you bring us a contract, we would already have gathered all the supporting documents from the borrower. So not only do we have the loan application and the credit, but they've provided us with tax returns, pay stubs, identification, bank statements, all that sort of stuff. So we can do a full loan submission, and it actually goes through underwriting. Everything is electronic. It is secure, but it's all electronic. So we scan it in, upload it, and it usually takes about 24 to 48 hours to get your full loan approval with the conditions that the lender needs to clear that file for closing. Conditions would be title work, appraisal. Yeah. Maybe they have a question about the bank statement. Maybe they need an updated pay stub, employment verification, all that sort of stuff. And some people get, they get a little bit miffed about that, especially people that are have a lot going on, people that are, the millionaires and the those kind of people that are like, wait a minute, I got $1 million in the bank. They should just look at my bank statement and approve my loan. But I tell people, true, but everybody is treated like the same in this business, treated kind of like a number. You have to check all the boxes.
It is true. And because basically all this process is to prove to the bank or whoever is lending the money that you, or Fannie Mae, Freddie Mae, who guarantees compliant. All these things.
Exactly.
To guarantee that the person obtaining the loan is able to pay it back with relative certainty.
Right. And they have to be compliant, because Fannie and Freddie, those are the big people that are refunding all this money to the banks that are lending it and underwriting it. Yeah. So you got to check all those boxes, and that's what the underwriter essentially is doing.
It's a government thing.
Exactly, yeah. Blame it on the government. So whoever's handling it usually gets the brunt of it, but it's we enjoy it, and like I said, I enjoy working with people, and even if people can get frustrated, and it's a very big emotional sort of thing, and I think buying the house is exciting. Getting a mortgage is just part of the process, So it's people have their jobs and their family and everything to tend to. Often I guess it's an inconvenience, for that 30 days of your life is having to gather paperwork and
and it's it is kind of a big question mark, because it's like a car loan. You go in there, you usually know in like 30 minutes they're like yep or nope.
Yeah.
And like mortgages, the process is a lot more involved, and
getting fully approved but we pretty much know going in whether or not it's going to work.
Yeah.
So we can tell you right up front, we're almost 100% sure whether or not it's going to work.
So if someone were thinking about buying a house, because I run into this question quite a bit, or this misconception. If someone's thinking about buying a house like a year down the road,
right,
should they talk to a mortgage broker?
Yes, actually, I do believe so. I mean, it depends on their situation. I think it's good to have at least a 15-minute conversation. But if their credit is sketchy, definitely we can pull credit and we can put them with the right people to get that sort of stuff cleaned up.
Yeah.
If they're self-employed and their income is fluctuating, a lot of times we'll help people, understand what they need to be reporting, because a lot of people try to take advantage of write-offs and they show no income.
Yeah.
So they be like, hey, I made $100,000 last year, but I'm only showing $4.
Yeah.
So we have to show more income as self-employed borrowers. So
and sometimes certain debts need to be paid down, other debts don't, and like most. Basically, unless you're in the mortgage industry, you don't know what those are.
Yeah, if there's a question, you should talk to somebody for sure.
Yeah.
It doesn't cost anything. We don't have application fees. I don't charge for time. We get paid if the loan closes.
Yeah.
So it's totally free. Why not have that conversation and make sure that you just...
I love talking to people that are going to be buying 2 years down the road.
Yeah.
Because really, in my experience, people that are going to buy, quote, 2 years down the road, it's really more like probably 1 year. And they probably need to start working on some stuff now, like figuring out what areas they like, working on their financing, making sure that's because it's a lot easier to get your financing in line with a 12-month lead time versus trying to do it in 2 months or God forbid, once you're under contract.
And they're more realistic and they're more patient, and it's just it's a more comfortable situation.
Yeah. And I love people that call me that far ahead, because I'm like, okay, well, this is going to be a very low stress process.
You're exactly right. These people are organized if they're having that conversation early.
Yes. So call us now today.
I would agree. It's never too early to start talking about that and planning things.
Yeah. All right. This is one of my favorite questions. If everyone could do one thing to help you at your job, what would it be?
That's very easy, actually, and that's organizing. You're talking about the customer. Let me.
Yeah.
Okay.
We'll do two parts. So we got the customer, the person actually buying the house, and realtors, because you do deal with a bunch of realtors as well.
Those are easy to answer. The buyer. It would be having organized documents, tax returns, pay stubs, bank statements, and all that stuff, and being good with a scanner. We are flexible, though, and again, I'll bring Vivian into she's amazing. She will drive to a buyer's house. I'll drive to a buyer's house. We'll have people. I had a doctor dropping his documents off at our house last night. Like, we're flexible.
Yeah,
it's not like
full service.
Full service. Yeah, we're not just the bank where you have to come down and meet us between the hours of 9 to 4, and that's your little window.
Yeah.
We're available in the evenings and weekends. We'll come to the house. We'll, we'll help you get your stuff organized. We've even had people give us their username and password for their bank accounts because they can't figure out how to save them to PDF.
Yikes.
And I tell them, well, you can change it. I mean, again, we're not criminals. We've been doing this. We've done thousands of loans. We've been doing it for many years.
That put my computer security.
Well, some people are, so people that are not tech savvy, they just don't know how to save it.
I have plenty of clients that are.
Yeah,
because all of my contracts are handled electronically nowadays as well. So
I can tell you 2 or 3 times people have given us their access to their bank accounts to go in and pull that. But you don't think about that stuff. We just do what we need to do. But anyway, that would be more helpful if people were good at getting us the supporting documents. I wish the industry would change to where it was easier, but it is very cumbersome.
Yeah.
It's not a big deal, but all that stuff has to be verified, to qualify. So I think that's what slows us down, if nothing else,
So
logistically.
So a scanner is important. There's actually, I know iPhones, I think same like Galaxies as well, but there's actually a scanning
DocScan. Yeah, I have it on my phone.
It works relatively well.
It's good, but I mean, you got to literally take a picture of one page at a time. It's not like, I mean, if somebody drops off,
it's not like the multi-sheet.
Yeah, 100 pages, then you got, let's say 2 months of bank statements, and let's say they have 3 accounts, and each bank statement is 6.
The largest document I have to deal with is like a 12-page seller's disclosure.
Yeah, you can take a picture one at a time. You're patient for that. If I got 100 things, I'm not going to take 100 pictures.
Okay, yeah. Go to Kinko's if you need to scan 100 pages.
People do that sometimes, and then they'll send us the wrong documents. So you're just thinking, what do we? I wish there was a way that we could help them organize their stuff. And I guess that goes back to the people that are buying 2 years from now.
Yeah.
You can tell them, hey, start putting your things in a file.
Because it's easier to do when you're organized instead of trying to run around
Right.
and throw all this stuff together.
And we don't have to go back that far. It's 2 years for tax returns and 2 months for bank statements and 30 days for pay stubs.
Yep.
So if you start organizing that stuff and putting it aside early, it's easy. As far as realtors, I would say what you do is key. Really just kind of setting the borrower up to what they can expect and handing them over and not trying to micromanage. You know, a lot of realtors that they try to get into quoting rates or how much down, and they really want to kind of coddle the borrower and micromanage and do our job. I just think that it doesn't give us a chance to get in and do our job fast enough. You know, it's a lot of borrowers. And I'll answer the questions for the realtors. They'll call and say, you know, what are the current rates for such and such? Which is actually, there's no way to really accurately answer that because it's all relative to the loan size.
I can tell you what the prime rate is.
Yeah, exactly. Well, rates. You know, so the interesting thing about rates, to get off the subject a little bit, is it's basically So rates are basically based on the layer of risk that the borrower is. So is it an investment property? Is it a primary home? Is it a condo? You know, you get graded on that. What's your credit score? Everybody knows you get graded on credit score. What's the loan size? People don't know if the loan's less than a couple $100,000, you're going to get hit for that. And so it's going to be a higher rate.
Because they're not making as much money.
Exactly. It's not worth the risk for the bank. The loan to value.
Yep.
You know, there's so many things that come into play.
So, and you mentioned condos. What's the risk with condos? Because this is kind of something a lot of people don't know.
It's not so much anymore, as long as they're what they call Fannie Mae warrantable, which means the HOA has been turned over. It's not too many investors. They just want to make sure that the thing's not going to come apart, and they're not investing into a piece of property that's going to be like a condotel. There was a big thing back in the day where they were turning hotels into condos and selling them, and they were dilapidated and just not up to snuff.
And there's some condos out there where you just can't get financing for because
they're not Fannie Mae warrantable.
Yeah, the way the condominium is legally structured, if like Fannie Mae doesn't want to touch it. So
yeah, and if Fannie Mae doesn't want to touch it, then I would encourage my buyer not to touch it. You know what I mean? It's going to be hard to buy. It's going to be hard to sell.
And mobile homes, that's another question I get all the time.
Yeah, mobile homes are good as long as they're newer, after 1976.
Yeah.
So they're doing a lot more mobile home loans now, so they've gotten a lot more flexible on those.
That's good. And
there's a difference. There's a manufactured home, a mobile home, a modular home. So there's a big difference.
Yeah, and the technical details matter on this stuff.
Right.
So
we have done a couple mobile home loans lately. They do a big inspection to make sure that everything's in good shape.
Yeah.
So, but I mean, there's enough loan products out there to get the job done. You know, you don't have to go back to the Wild West days of subprime and 100% and stated income, stated asset. And I mean, people are offering bank statement programs and stuff, and we have access to doing all that. There's nothing that Rice Financial can't do, because at the end of the day, all these, creditors out there are wanting us to use their products. Mm-hmm. I'm just careful to use the stuff that's kind of like the overnight success, because it's here one day, it's gone tomorrow, and it's not really good for your reputation. Yeah. And also, they always seem to come with all kinds of overlays and rules, that little surprises when you get into underwriting. Yeah. Oh, you can't have blonde hair to get this loan. We didn't know that.
No slides
until we send in the picture of the ID. I mean, it's just ridiculous little things that come. So it's good to stay with good old Fannie, Freddie, FHA, VA, USDA. Like, that's the stuff that we like to work from, because they have enough great stuff out there to pretty much get everybody qualified. Yeah. And if you don't fit within one of those programs, I would say, let's get you conditioned so that you do. Yeah. If you don't have any, two nickels to rub together, instead of grabbing down payment assistance, I always say, let's try to save up a little money. Because it's not that hard to get there.
It's true. Yeah. Just usually a few months, like whenever people get really focused on it.
Yeah. So, there's plenty out there for everybody. I don't know if I got off the original question.
I think, listen, divergent topics are...
Well, we were talking about, actually you were talking about if people could do two things, and we talked about the buyer and the realtor. The realtor was, just setting up the buyer to trust us. Yeah. What's interesting is we have, I know as a realtor you're supposed to give out, 3 names you're supposed to recommend, so that you're not trying to curb, Well... a lot of people that call us from trusted realtors that we have good working relationships with, they come in just trusting us. You know what I mean? They're not questioning us. They're not asking about rates, because at the end of the day, and again, back to rates, we're all dipping from the same well. Everybody can get the same rate. I cannot get a better rate than somebody else can get.
Yeah.
We're all pulling from the same source of money. Nobody has the corner on some sort of Chinese market that's loaning money that's cheaper than everybody else. It just doesn't work that way. People will call and they'll say, "What's your rate?" Well, it's the same rate as everybody's rate.
Yep. But there is one difference, and I want to cover this. So why would people go to the mortgage broker? Like most people, whenever they're thinking about getting a loan for a house, they will go down to their bank or credit union. What do you do that's different from what a bank or a credit union would do?
That's kind of a two-part question. The difference between a mortgage broker and a bank would be that the banks, most of the time, they're going to be also lending Fannie and Freddie money as well, but they have their own overlays and their own rules and guidelines to where they're going to be a little more strict. So let's say they have 4 buckets that you're going to fit into as a buyer. If you don't fit within those 4 buckets, then they're going to deny the loan, but yet you might be easily qualifiable from Fannie Mae. So a mortgage broker will be able to, kind of search out all the, hundreds of buckets that you might fit into and find that solution for you. And you're really just dealing with one person. So that's the benefit of a mortgage broker. Plus we deal wholesale. So it's almost like buying groceries. I don't know if this is a good analogy, Publix versus Costco, because it might be a different product. But it's like you're getting the same product for a wholesale cost through a broker. So you're going to get a better deal, slightly better. It's like, again, the money comes from the same place, but you might get 1/8 of a point, 1/4 point better on a rate.
Which, adds up over the course.
Yeah, definitely. Especially if it's a big loan. I think that, and then the second part of that I was going to tell you is the us versus another broker. I would say, I believe that our communication is very good. I believe that I know that we're available evenings, weekends. I think that our position as a company, and this is myself and all the people that work with Rice Financial, is we really do want to put the people first. And I know that a lot of people will say that, but that's where our heart is. Those are our morals, our standards, our guidelines, our belief systems. We treat people truly like we're working with family. And that's just how I would do it. If I had to do it for free and I couldn't make a living doing it, we're still going to do the same. We're going to take the same approach. So even if things get tough and I'm not making a living doing it, like I said, I'll go cut lawns or do something different than doing mortgages. So we really put the borrower first. We take care of them. We coach them through the process. So that is going to be the biggest difference. And one more thing I'll touch on: when you're dealing with our company, you're only talking to me and one of my loan processors. So you're literally talking to 2 people. Whereas if you go to a bank, you might get like some sort of automated message and press 1 and then 2 and. It's frustrating.
Yeah.
And,
and I have had some buyers who, have had issues with some of the large national places because they're calling some place in Michigan or whatever. And, like they're responsive, but it's, you're still calling a call center and having to weed through all that stuff.
What a lot of people don't know, let's take Quicken Loans, for example. We're set up with Quicken to run our loans through them. In fact, Quicken calls us almost every day. They email me, "Can you please send us some of your business?" It's the same Quicken loans that are out there on the retail side. They're covering both areas. So it's the same underwriter, same product. And they may underwrite it differently, but either way, it's the same company. So when people are like, "I've got approved through Quicken Loans," well, I can take your loan through Quicken. I may not use them. I may have a better channel for you, but in other words, there's nothing that we can't do. So we're kind of a one-stop shop, and that's the benefit. And really, to be honest, Kyle, is every broker should be able to do the same thing. What's going to be different with Rice Financial is just I feel like we have that personal service that not saying nobody else has it, but I know that we have it very well. And I guess a way to prove that is if you talk to Mobley Homes. We're a preferred lender with Mobley Homes, and we have no monetary relationship with them. Like we're not an affiliated business. They just send business our way because they like the way that we handle it. If you talk to Antonelli with Encore Homes, she used to be with Avatar Properties. I've probably closed 400 or 500 loans with her. She's another one of those realtors that just says, "Call Bart."
Yep.
Now she works with David Weekley. They have their own lending in-house. if she had her way, she would add us as a preferred lender, but they're a big company and that's complicated. But I mean, there's people like that are a staple. Eaton Realty. I mean, I'm not trying to throw other names
it's fine.
out there because I know that everybody's competitors, but these are all companies that use us exclusively because of the legacy that we've brought to the table, and we're just a small company.
Yeah, and I know, like I usually give my clients, two mortgage brokers to contact, and I always let them know, go talk to your bank or credit union as well. And 9 times out of 10, you're the one that they go with. So
right. So and because I know that when we get people on the phone, they're going to feel comfortable with us for the most part. And when I say somebody uses us exclusively, I don't mean to say that anybody's not steering. We're going to talk about that in ethics in a minute.
Yeah.
But people just refer us.
Yep.
The borrower has the ultimate choice.
Yeah. Yep. It all comes down to the buyer and what the buyer is comfortable with. So I always like to cover a little bit of the ethics involved in all manner of real estate, because I know a lot of people aren't aware of, like me as a realtor, like what ethics I'm legally and financially bound. Like I can be fined if I step outside of my ethics requirements. So with being a mortgage broker, what's an ethical part that maybe the consumer is not familiar with?
The consumer is the buyer or the realtor?
Yes, buyer.
Okay. That's a good question. They haven't never asked me. I would say affiliations with realtors, lead sources, a big thing in the industry that you can't do. And it's actually very well known, especially on the mortgage side, because we have to do all the constant testing and relicensing. But it would be kickbacks is a really big thing that you can't do in the industry. It's a big no-no. And I mean, people were trying to find ways around that, I think, by doing affiliated advertising. You can do that with Zillow and that sort of stuff.
Yeah.
But one of the things
just so we're clear, you're not paying to be on this podcast.
Yeah, exactly. Yeah, we don't do kickbacks. Again, it's one of those things where, if we can't do it legally and we can't do it right, we're just not going to do it. So it's but that would be something that they may be interested in knowing, is if a real estate agent, refers us, it's not because there's any monetary relationship. It's because they just feel like, okay, well, this person is going to be kind of an extension of, what I'm already doing. And I feel like they're professional and they're going to communicate well. And it makes it easier for you. Mm-hmm. I tell people, I said, look, we're all like in a boat together. You got your realtor, your title company, your buyer, your seller, your mortgage broker. We're all in the same boat trying to get to the same shore. Everybody's got to pick up a paddle and go. And I think that, people just want to make sure that everybody in the boat with them is going to do their part. Yep. So I think that's why a realtor such as yourself wants to make sure that you're doing business with somebody that you can trust, you can call on. And it's not to say that it's not going to be choppy water, back to the boat analogy, but that the people that are navigating through that have some common sense. They communicate well. You're gonna get answers that make sense, and you're gonna get answers that it's really gonna happen when somebody tells you. I know that there's other realtors in the area. I don't know if it's okay to say names, but anyway, there's people in the area that will get a pre-qual letter from us, mm-hmm. and they're listing a home. And they'll say, oh, yeah, Bart Rice Financial, I know that that's good because we got that pre-qual. We're comfortable with it. And they'll actually call me, even though they're not the ones that... I thought
you were going to say some bad stuff about people.
No. I was talking about people...
I was like, it's okay.
People in the... Yeah, I mean, I'm just saying that it's, it's a small community, like real estate. Everybody knows, the top producers and who's doing well. And it's good to know that we're getting referrals from all these top producers in the area. Mm-hmm. And then when they see a pre-approval letter from our company, that they recognize it and that they feel comfortable with it. And it's, again, just because I think, we're just doing what we say we're going to do. And it's not always easy, but we're navigating through that sort of stuff. And if something can't be done...
It's hard to tell people, hey, I'm sorry, you can't get a house right now.
Right.
Like, that's one of the hardest parts of my job.
Well, it's funny. Vivian will tell me, she's like, sometimes I feel like you need to give up on this situation. This person's not ready. And sometimes we're just really trying to find, a solution, something that we can do to help. So, you got to be careful of that. Yeah, it is hard to not just hang in there and try to figure out what you can do. But
I don't like letting people down. Like, it's
right. Yeah, but the people want it really badly. And I mean, but at the end of the day, it really comes down to, You give them their homework assignment. If it's credit, go meet with so and so. We have some really good people to help you repair credit.
Because there's only so much you can do. Like a lot of this is on the buyer. Like they have to take
They
care.
have to be-
they have to
yeah.
take care of business.
They have to meet you in the middle of the street, And that's the thing. We'll give people homework and we'll say, okay, go get these things, all these affairs in order. Call so and so to help you with your credit, And if they do it, they'll come back in a few months, 6 months, 12 months, 3 months, depending on their situation, and they're ready to go.
Yeah.
So I always say, hey, look, if they're willing to do these steps, we can't just pick somebody up, throw them on our back, and say, hey, we're going to carry you to the finish line.
Yeah.
They got to do their part too.
Yeah. Well, thank you so much, Bart. Did you want to give a shout out or?
No, I do appreciate all the people in the company that are working with our company. Vivian Newton, Casey Congle, those are our processors. Fred Meinke over in St. Pete, he's client relations. Alex Dunn is client relations here in Tampa. Everybody is just doing a great job for Rice Financial. I appreciate it. Definitely takes a team.
Yeah. What's the best way for someone to get in contact with you?
Best way for somebody to get in contact would be to call or text my cell phone, 813-240-5776.
All right. So we're going to put that in the show notes. I'll also put a link to your website and all that good stuff
Sure.
if you want. All right. So just check in the show notes there for the contact information. Bart, thanks.
All right. So thanks a lot to Bart Rice of the Rice Financial Group for sitting down and doing that interview with me. Took a little bit of maneuvering and negotiating to get that interview with him. So Bart, thank you very much for doing so. My name is Kyle Sasser. This is Great Homes Tampa Bay. I am a Tampa Bay native and a realtor. So I'd love to help you find your own great place in Tampa Bay. And Bart, I'm sure, would love to help you as well. So feel free to contact me below. I got it in the show notes there. You can reach me at kyle@sassergroup.com. And yeah, if you're looking for a house or a condo here in the beautiful Tampa Bay area, I'd love to help you. Thanks for tuning in, guys.